It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Well, hello there. You know how much I love it when you join me for the Trading Stocks Made Easy podcast. And today is our special time together, so I'm really happy that you're here. You know, if you've been listening to this show for a while, you know we talk a lot about trading and investing in the stock market. You've heard some of my guests come on and wax philosophical about covered calls and how they're now making $5,000 a month and some people make more. We've also covered on this show complex derivatives. For example, bear call spreads and call option buying. And you know, since you're a regular listener, I like to talk about LEAPs, long-term equity anticipation securities. However, today we're going to do something a little bit different. We're going to talk about credit and wealth. You know how I'm always talking to you about having a financial education if you really want to take your life to the next level and live your dreams? Well, part of that financial education is understanding your credit. So if you'd like to be richer or richer educated, today's show is definitely for you. So I have a wonderful guest on who's been making the rounds on a lot of different podcasts. His name is Gene Babachenko. And I'm going to come back and talk to Gene about wealth and credit right after you take a listen to this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
And welcome back to Trading Stocks Made Easy. Yes, if you haven't been to thewealthyinvestor.net to check out our products and webinars, what are you waiting for? This is the time to learn how to be really successful in the stock market. And as you know, I do my best to make it easy. Now, on today's show, I am thrilled to have somebody back in the studio who I've actually had on other shows, Gene Babachenko. Gene, how are you?
Doing very good. Good to see you again.
Are you excited to be here?
Yes, sir. I love coming here.
You know why I'm excited when you come here?
Why is that?
Because everybody has a credit score,
Yeah.
and they don't even know what it is. Most people don't understand credit, right?
Correct.
And there's this relationship, Gene, between credit and wealth.
Yes.
Now, I'm going to explain this, and then you go along and you tell me if this is true.
Okay.
So my father used to say to me, isn't it funny that the rich people, right, the richest people in the world, can borrow the most money even though they don't need it?
True.
Right? So one of the reasons that they can borrow so much money is because they have, as I like to say, good credibility.
True.
Right? You can loan them money and they'll pay it back, right?
Yes.
Okay. For those of us who are maybe in the wealth building position or really don't understand the credit game, that's what today's episode is all about. So we're going to keep this extremely simple.
Okay.
And you know what I've learned, Gene?
What's that?
You really can't insult anybody when things are real simple.
Well, you know what? You were talking about people having wealth and how credit comes into it. One of the reasons people have wealth is because they have to spend less on the things that they buy. If you have good credit, you could be purchasing the same type of items as other people, but you're going to be spending less money to purchase the same things. You know, my father used to say it's not just about how much you make, it's about how much you spend or how much you save.
Yes.
And if you have good credit, it's going to cost you a lot less for the things that you need in life.
Well, we're going to get into that in this episode. See, this is why you're here. All right, so let's start from the very beginning, a very good place to start, as they say.
Sounds good.
So everybody has a credit score, except there are three major credit reporting agencies. What are they?
They are Experian, TransUnion, and Equifax.
Correct.
And they're all independent of each other.
That is correct. So each one of these major bureaus has a score that they will assign to you.
Yes.
Now, I know this is broad, but we're going to try to narrow it down for the audience.
Sounds good.
A good credit score, Gene, would be what?
I usually tell people a good score is typically anything over 700.
Well, that is good.
Yeah, I mean, that's once you get to the 700s, people pretty much give you anything you apply for at that point.
Now, a great credit score.
I would say anything over 740.
Right. How high can you go? Tell the audience.
The highest the bureaus go, I believe, is up in the 800s, about 830.
Right. Now, who has an 830 credit score? I've done well for myself, but who has
almost no. You know, I think my dad.
Your dad had a
yeah. Basically, the people that have an 800 score or higher are people that have, 10, 15, 20 years of perfect, immaculate credit history, no outstanding debts, no derogatories. It's people that have built it up over a long time and have kept it perfect over that time.
Now, the higher your credit score, the lower your interest rate if you are borrowing money, correct?
Exactly.
Explain that.
Well, just as you said, people give you credit based on your score, and they determine how much of a risk you are based on your score. The lower the risk, the lower the interest rate. And as a result, again, people are paying a lot more for the same things that they buy as others just because their scores aren't as good.
Correct. So that means theoretically you could be living in a neighborhood where you have a mortgage on your home and the person right next door could be paying a higher rate, not only based on where interest rates were at that time, but their credit worthiness.
Exactly. Right? And a small percentage, even 0.25% difference, but if you have a bad score, it's going to be more than that. But even 0.25% or 0.5% difference could be a matter of hundreds of dollars every single month.
Yes. And over the life of the loan.
And over the life of the loan, it could just be thousands and thousands and thousands. I mean, it depends how much the property is, obviously. But over the life of the loan, yeah, they could be paying almost twice as much for the same house.
So let's go back to this idea of a score. Now, a really great credit score like your dad, you'd say would be about 830.
About 830, yeah.
Okay. And that means an 830 across the board on all three credit reporting agencies.
When you're buying a house, they pull all three credit bureaus.
Yes.
And they take the middle score.
Hold on. I want to get to that. But This is where I was talking to someone lately. They were like, oh, so this credit game is a hustle. So I really want to kind of break it down for people. Okay. So one credit reporting agency could theoretically have you at 830. The other could have you at 770.
Correct.
And the other could have you at 750.
Correct.
Explain to people what causes that.
Well, there's lots of different causes. But the main one is that because all three credit bureaus work independently, not all of them always have the same information. There's a lot of companies that report to one bureau. There's companies that report to two bureaus. And usually the big ones report to all three. The Bank of Americas, the Citibanks, those types of big corporations usually report to all three. All three bureaus actually have a different, what's the word I'm looking for? It's not curriculum. It's
criteria?
Criteria. There you go. They have a different criteria for who is allowed to report. And I'll give you an example. I actually tried to start a company about 10 years back. And what I was trying to accomplish is to build a company that reports people's rent and leases on their credit to help them build credit via their current leases and rent that they're paying. One of the biggest barriers that I hit is that the bureau said, well, we can only accept reporting for your company if you're reporting at least 1 million people. That was Equifax.
Right.
And
since you didn't have 1 million people when you were starting your business.
Exactly. And you can't exactly say, well, I'll tell you what, you hire me and I'll do this. And when I get enough people, eventually it's going to report. Right. You have to deliver the goods right away. And that's basically what stopped me from being able to do this business, is that the bureaus some of them have just crazy criteria. But as a result, not all companies can report to all three bureaus. So you're going to have different information on different bureaus. And as a result, you're going to have different scores.
Right. Now, the other reason that you could have this discrepancy, if you will, between the bureaus is one will have something called a derogatory, and the others may have no record of that late payment or derogatory, right?
Absolutely.
Why does that happen?
Well, again, it's usually because the company, it's not always the same people reporting on the same reports. I mean, that's the main reason. I find that, for instance, when I do the work, oftentimes the negative item might come off one bureau and not the other. So when I'm working on people's credit, and items are coming off, they don't normally come off all three at the same time. You'll see one bureau taking one item off. You'll see another bureau taking another item off. It kind of becomes spotty until they all come off and it's clean. So that's one reason. But again, the main reason is because from the beginning, not all companies have the same information. Not all companies report with all three bureaus. And also their score calculations are a little bit different from the bureaus too.
That is correct.
Yeah.
Okay. Now, most people know me as the wealthy investor, so they're like, what does credit have to do with stock trading? And I'm going to draw that parallel here in a moment. But I just want to get through some of the basics, okay? Sure. All right. Now, I wasn't always the wealthy investor, and I wasn't born the wealthy investor. And as part of my financial education, I had to learn the ins and outs of credits.
Sure.
Okay. So there used to be this trick, and you and I talked about this in another show. There used to be this trick. If you had a derogatory or a series of derogatories, you could fool the system with a secured loan. Do you remember having this discussion with me?
Well, I don't really.
Hold on. Let me explain to the audience.
Okay.
So what you would do after you've pulled your credit report, right, is you would go to your bank or credit union. You'd borrow $500 from your checking. They would put that $500 on loan. Right? They would hold it.
Well, basically what you're talking about is opening up a secured account, a secured credit account.
Right. But
or a loan.
Let me just explain to you, because this is how the system used to work.
Yeah.
So then that loan would be like $24 a month, right?
Yes.
Okay. After 90 days of paying that loan back to your bank, it shows up as something positive.
Sure.
And what are creditors interested in? Your most recent history.
Yes.
Therefore, the weightedness of the derogatory wasn't as grand because you offset it with a positive payment history.
That is true. But let me give you a caveat to that, though. If you borrow something for 3 months and pay it back, the only thing I would say in that situation is if it's a straight installment loan, might not help you as much as for instance, a secured card. And the reason being is because one of the things that determines your score is the length of the account, how long you've had it. If you get a loan and you pay it off in 3 months, yes, you've built credit, but you've only built 3 months of credit. If you have an open account, like an open line of credit, a secured card, that will build every month, and you could keep it forever if you want. I would say that would be a better way to go, just because that builds a lengthy credit history as opposed to a short one just to offset.
Right. But if you couple the secured loan payments, which is recent, and it doesn't have to be 90 days, it could be 6 months, and reduce the amount of debt that you're carrying, you're engaging in positive activities that help boost your credit score.
Absolutely.
Right. So I just want people to get a sense of empowerment. It's not like I have bad credit. What can I do?
Yeah. Anybody, even with bad credit, there are ways to build credit. One of the things, like you said, you can open an account. I would suggest a secured account just because it's open-ended. That's one way to do it. You could also have people add you to an existing account, which works even better. Piggybacking, exactly. And the reason being is because when that information appears on someone's report, it looks like you've had it as long as the original person has had it. So instead of adding brand new credit, now you've added credit that could be 5 years old, 10 years old, 12 years old, whatever it is. Basically, it's just a matter of a person having a friend or a relative call and just add you on as an authorized user.
That is correct.
You could add yourself as a joint holder also, but then they actually have to look at your credit, which in some cases just won't work.
Now, another way to fool the system, and I could already hear you going, yes, Tyrone, but. Okay, you ready?
That's fine.
Gene, I'm just giving you what I have.
I got you.
And I'm giving you what has worked.
Okay.
It is the magic of a home equity line of credit.
Yes.
Now, I'll tell you why. When you apply for the home equity line of credit, it's going to be recent history, right?
Yes.
But when you consolidate all of your credit cards and you throw it on that home equity line, you now have all of those credit card lines clear. Now, you're going to say to me, yeah, but Tyrone, the history of the home equity.
No. Okay. I'm not going to throw that at you at all. Actually, It's a fantastic idea. When people talk to me a lot of times about getting rid of their credit card debt, one of the first things I ask them is, do you have a home loan? And do you have equity? Because the best way to get rid of that debt is to get a home equity line of credit, transfer all that credit card debt, because a home equity line of credit doesn't count against you the way credit card debt does.
Because it's secured.
Well, not only because it's secured, but it's considered a loan.
Okay.
As opposed to, even though it is a line of credit, it reports as a loan. So you're basically getting rid of all your debt ratios all just fall through the floor. And that's one way to actually really quickly raise your score. And if debt is the reason that your score is so low.
Yes, but when you say fall through the floor, you mean in a good way.
In a good way.
Because you, in effect, wipe out all your credit card debt.
We're wiping out your debt. Exactly.
Right. Okay. Now, I got to go to commercial. Mm-hmm. Can you stay through the commercial?
Absolutely.
I'm only teasing you, Gene. Of course you can.
Where am I going to go?
Exactly. And when we come back on the other side of this break, I'm going to tell you something very interesting that happened to me.
Okay.
That serves as what I believe is a powerful example of good credit and wealth.
Okay.
You ready for this story?
Can't wait.
I'm going to tell a story to you and Gene Babachenko right after you guys take a listen to this.
You're listening to the Trading Stocks Made Easy podcast. Want to learn more about how to trade and invest in the stock market? Visit thewealthyinvestor.net/products. That's thewealthyinvestor.net/products and order the Wealthy Investor's Guide to Stock Market Success audio series. This easy-to-follow 5-CD audio series and manual will teach you the basics of how to buy and sell stocks, how to collect quarterly dividends for life, plus hidden income generating strategies like covered call writing and volatility trading. Start creating financial freedom right now. Get the financial education you need to get ahead. Visit thewealthyinvestor.net/products.
And we're back to Trading Stocks Made Easy. Hey, Tyrone Jackson, the Wealthy Investor here. Yes, rather than making life really hard, if you want to follow my trades in the stock market, what I suggest you do is sashay on over to witradeschool.com. Someone recently called it's like Netflix for stock market traders. And the reason they say that is because there are hundreds of videos at WI Trade School with all the strategies that you hear me talk about here on the podcast, such as covered call writing, dividend collection, stock splits, stocks buyback. And the best part about starting your membership at WI Trade School, you get to send me your questions and I answer them, but only for members. So don't wait. Start your membership at WI Trade School right now. Today's show, we're talking about credit and wealth. And my special guest, who I love having on the show, is Gene Babachenko.
Love being here.
Do you know how many years it took me to get the Babachenko, put the right spin on it?
Let me tell you something. I don't think I got it right until high school. So.
Is that right?
And that's my own name. So
I'm really proud of myself. So Gene, between you and I, scored low on the SATs, scored high on your name, and that's what matters. You never heard that before, right?
No, I haven't, but it's great.
All right, so Gene, this is what happened to me. This is what happened to me. All right. So I've done well in the stock market. It's no secret. One day, I live half in New York, half in LA. So one day I'm in upstate New York, and I take my daughters out to Panera Bread. All right. You getting the picture here?
So far.
Okay. In my car, right? And I come back from lunch at Panera Bread. We get in the car, and the car won't start. Instead of the, it's going,
yeah.
I turn the key. I try it again. Now, it's clear, Gene, that we're not.
You're not going anywhere.
No. Now, because I'm the wealthy investor, I say to my kids, do you know what we're going to go do? They were like, what, Dad? I was like, we're going to go buy a brand new car today. And they were like, okay, because I was taking them shopping at the mall.
Sure.
Okay. I call AAA. They take me over to my local dealer up there. I get out of the car. The guy goes, hi, how can I help you? I was like, I want one of those. Which I don't know if he's heard that from too many black guys, but I was like, I want one of those. Okay. So we go in, we pick out the one. I want the moon roof and the air conditioning and the whole thing. And I was like, and I have to drive it home right now. Okay. So the guy does all the paperwork and he says, we're going to do a credit pull, which I was not worried about. But he goes, do you have any assets? Now, I didn't tell him I was a wealthy investor, and apparently he doesn't listen to the show.
Okay.
So I put down my TD Ameritrade accounts and numbers. Gene, I don't know if they did a credit score, but just the fact that I listed assets, they were like, it took like what felt like 30 seconds.
Yeah.
And they were like, which car do you want?
Yeah.
Okay. So I tell that story. Did you like that story?
It is a good story.
You know the best part about the story,
What's
Gene?
that?
It's true. All right, so here's this. So it was great for my kids. They were like, we went over in one car and we came home in a brand new car. But my question is, and I didn't ask, but it all happened so fast. Because I had assets, did that trump my credit score?
That's hard to say.
Okay.
I have never been to a dealership where they don't check your credit.
Okay.
unless you're telling them you're paying in cash.
Okay.
That's the only time I've ever been to a dealership or even heard of a dealership not checking a credit score. Mind you, it only takes a minute to pull your report.
Yes.
It's really quick. I mean, I pull reports, they take me 30 seconds to pull.
Yes.
So chances are they probably did check your credit. However, if you have a lot of assets, they probably feel safer. So I can't answer because I wasn't there.
Correct.
I don't know what their process is, but it's always a possibility. I mean, when you go shopping for a home, oftentimes they'll look and they'll check your assets, and oftentimes if your assets are there, it might actually trump the credit. You know, depending, if you're willing to put a certain amount down, of course. Yeah.
And I don't want to get into, because this is, maybe you'll come back, we'll do like an advanced discussion, but I have a beef with underwriters. I've bought and sold several homes.
You're not the first. By the way.
I have a beef. I think underwriters at banks are the kids who were picked on in school. And now when they get a chance
revenge.
When they get a chance to approve you for a mortgage, they're like, okay, here's what you need to do.
Well,
You're like,
the problem is that when it comes to underwriters, and I feel their pain because they really have to follow a very strict regimen. It's not always the regimen that's dictated by law so much as their company's own regimen, their company's own
policy.
There you go. There you go. So I get your beef, but I've been on the other side because I've also worked in home loans.
Okay.
And I've had to see what underwriters have had to deal with. And a lot of times they want to let things go through and they say, you know what, this really isn't a big deal. But they can't because the policy of the company says you have to do this, 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 and this.
All right. I was buying a house once, and the underwriter said there was a $52 dentist bill, which I guess showed up as a derogatory, only on one request. And could you write us a note and explain to us why the $52 is there? I was like, you can't call them. Yeah. Right. Yeah. So I had to write a note. And because I wanted the house, I was very polite.
By the way, I got to say, in most cases, they don't care about medical bills.
Okay.
I've found that most
this guy did. Jim.
Yeah,
he was very serious about the note,
and it's only $50. That's just crazy.
Right. And
I would have just paid it. That's it.
And you know what the loan officer said? He goes, "It just goes in your file." Okay. So let me get to something else the audience is probably going to relate to. And this is called a soft pull.
Yes.
Okay. So if you have cable at one place and you move to a next place and you want service and you call in, they can either ask you for a deposit or they can say, we're just going to do a soft pull.
Yeah.
Now explain to our audience what a soft pull is.
Okay. First of all, when you're applying for something, it's almost never a soft pull. Okay. It's a hard pull. A soft pull is when a credit card company wants to offer you something. Like oftentimes people get in the mail, you've been pre-qualified for this and this and this. That's usually as a result of a soft pull where they check your credit, but the only one that sees it is you on your own report. If a creditor pulls your report, they will never see that inquiry. And that's really the only difference between a regular hard pull and a soft pull is that you're the only one that sees it and it doesn't count against your score because you didn't initiate it.
Because an inquiry
it's when
from
you
a
initiate
creditor.
It's when you initiate it yourself.
Correct. A soft pull, could they just be pulling from one of the three agencies?
Whatever their policy is.
Okay.
And every company is different.
Because sometimes it costs them money to check your credit, right? So they're like, I'll just go to Experian and so on and so forth.
Yeah.
Okay. And this is the part that I really want people to understand is an inquiry.
Yes.
The more people check your credit, it has a negative effect on your score. Explain.
Well, the reason for that is that one of the risk factors is whether or not you're trying to overextend your credit. If you have almost no inquiries, a company will see that and say, okay, this isn't somebody that's just trying to pull credit from all different sides. However, if you go and you start applying for stuff everywhere, all of a sudden you become a bigger risk because you're not just applying at one place, you got multiple places that you're trying to draw credit at once. And companies see that as a risk. So as a result, when you do get inquiries, every time you get one, it drops your score a little bit.
Yes.
And it's actually unfair because there's a lot of companies, like for instance, you were talking about buying a car, they could run your score with 6-7 different banks.
Correct.
And all of a sudden you have 6-7 inquiries when you just came to do one purchase. And even though most of them will say it only counts as one, oftentimes the bureaus can't tell if it's just one. There's no way to differentiate it because it actually comes from multiple companies.
Correct.
So unfortunately, that's one of the realities of buying things like a car.
Now, I thought that Congress passed legislation about 26 months ago that said if you're shopping for a home mortgage, you had 3 inquiries that would negatively affect you. Is that true?
To be honest with you, I haven't seen it put into practice.
Okay.
Okay. There's a lot of things that look good on paper.
Okay.
But again, the problem with a lot of these things is how can they make it work in real life? And again, if you have 3 different companies pull a mortgage report on you, pull a credit report on you through a mortgage, there's no way for the Bureau to differentiate, that it's from one company checking 3 sources or 3 different sources pulling the report.
Okay. Now, we're coming up out of time. I know we're going to have to go here. But here's what I want people to really understand. First, getting a financial education is really important, but checking your credit.
It is.
Now, you like Credit Karma.
I do.
Okay. Why is that?
Well, there's a lot of sites out there that all claim that they're free. And there's a lot of sites out there that, they try to lure you in by trying to get you to see only a piece of what you have, a piece of your history. Karma is the only site that I've really found that's actually free. The only negative to Karma is that they don't include Experian as one of the bureaus that they could check. They probably don't have a contract with them. But it's still a good way to just kind of keep an eye on your credit and see what direction it's going. The scores aren't going to be especially accurate, but they should be in the ballpark. And you could kind of get a basic idea of how your credit is doing by checking Credit Karma. Now, obviously, if you want a really accurate report with really accurate scores, a lender of some sort is going to have to pull it because then you actually get the FICO scores.
Wow. Hey, listen. I love having you here.
I love being here.
Will you come back again?
I will be here anytime you ask me to.
And next time you come back, you know what I'm going to talk about? Business credit, Dun & Bradstreet.
Okay.
Do you do that kind of work as well?
I haven't worked on Dun & Bradstreet, or at least not in many, many years.
Right.
When I first started doing this work, I did do some work with Dun & Bradstreet. But quite honestly, it's been at least a decade.
Okay. How's your stock market portfolio doing?
It's almost non-existent.
Okay. So you know what you need to do?
Invest?
No, you need to start a membership at WITradeschool.
I probably do.
Gene,
we got cross-selling.
Yes,
cross-promotion here.
I'm trying to help you out right now.
I appreciate it.
Okay. Gene Babachenko, you're a joy to have in the studio.
Thank you.
Thanks for playing along and educating people at the same time.
Anytime.
Now I'm going to have a few words for you on credit and wealth on the other side of this break.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't know which stocks to choose for trading in today's market? No problem. Just follow Tyrone Jackson's hot stock picks inside WITradeschool.com. At WITradeschool.com, you could also follow Tyrone's weekly stock market tutorials and investing advice. Plus, each week you can submit your trading and investing questions directly to our staff, and Tyrone will answer them as part of our weekly video Q&A sessions. Begin your membership right now and you'll get instant access to WITradeschool.com's video library. That means you'll get to know all of Tyrone's major and minor trading strategies, including covered call writing and volatility trading for fast, sexy profits. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. In addition to a successful podcast, Tyrone's editorial content has been featured on CBSMoneyWatch.com, NASDAQ.com, and YahooFinance.com. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Hey, listen, I talk to you all the time about getting a financial education, that you really can change your life if you change your belief system about money. Stocks and investing is one part of your financial education. Filing your taxes on time, becoming educated about taxes, and learning about your credit is another part of the financial education if you want to up-level or change your life permanently. The reason I did this show today on credit is because a lot of people don't realize there could be someone out there with your name and you have their credit report. Did you know that? So don't worry about getting the perfect credit score, but do check it. It's a part of being financially responsible. Hey, listen, I love it when we have time together, and I hope that you see value in the show today in the same way that I intended to deliver it to you. This is Tyrone Jackson, the Wealthy Investor, saying keep an open mind because the best is yet to come. See you soon.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.